Hello, traders, and happy weekend. So it's beautiful out here in Southern California today. This is coming to you from the back patio. So, anyhow, let's just take a look at our markets here initially. So, the S&P continues to largely be in this trend. It didn't make a higher high here just yet, but overall, it is showing some strength. We're still sort of in this big flag pattern that you see. Again, we did break out of a pattern that was based on this line right here and this uptrend line. Now, this uptrend line is still intact because we are making higher lows. Okay. Then here, we haven't yet made a higher high here. When that happens, we'll need to draw in another trend line that will likely come along this way. And then we might be in an up channel if we do, in fact, break to a higher high. Now, as I told you last week, my expectation was that we're probably going to get into this 4130 to maybe even as high as 4180 range or just shy of 4200, and we could very easily chop here, in between this 4071 to 4171 range. And that could go on for a period of time. I mean, things tend to get a little quiet as you get into the late spring and summer months. You've probably also heard the saying, sell in May and go away. So many times, much of the gains that happen in the course of a year do tend to happen in that first 4 months, 5 months through the end of May. Anyhow, those are a couple of the things that we're going to be looking at here going forward. Is that going to hold true this year? Will people start selling things off in May and then the market kind of goes quiet, or maybe drifts sideways or down going through the summer months? So that's kind of my general expectation or outlook for this market. Again, probably between, somewhere in this range, the 4050 up to 4150, 4200, somewhere in that general area. So let's take a look at our performance at this point. So these are our class trades now since 12/1. These are all of the various trades here. We can see we've had a really nice run of trades. These are some that we closed out. Let's see, which ones did we close out this week? Well, we closed out 4 winners this week. Some of them weren't big winners, but they were in fact winners. Um, so these are our current stats. We've had 35 gainers, 7 losers. Um, let's see, our largest winner was 1600. Our largest loser was 669. So those are good stats. Um, and we're up about $10,400, somewhere in that general range, based on the various trades we took at the size we took them. Again, our trades will vary anywhere from maybe having $2,000 to $2,500 in risk at entry to as small as $200-300 on earnings trades. So this is the bar chart of all of the trades. This shows each trade that was profitable. This shows each trade that was a loser. Then this is the equity curve of those trades. So this shows our profitability. These are on all the live trades that I've shared with students. So that gives us kind of a pretty good rundown of what has closed. Now let's take a look at our remaining open trades, kind of see where we're at on those and what the game plan might be. Now, I also want to say that volatility is drying up a little bit, where we had been running in the 25, 28 range on the VIX, the volatility reading. We're now in the 18, 19 range. So these trades aren't quite as juicy during those time frames, and you have a little worse risk to reward profile. That doesn't mean you don't trade butterflies during that time, but I do personally scale back the amount of my account that I'm using in these trades. And we're going to discuss that all about that in the butterfly deep dive class. That'll be one of the topics we'll be discussing this weekend. Of course, that's recorded for anyone to purchase at a later date as well. But so when the volatility was up in the 25-30 range, I might be using 50-60% of my account at risk, maybe even as much as 70 in rare cases. Now that we're much lower volatility, an increase in volatility would hurt most of the trades that I would have on. So as a result, I tend to have much less at risk. Right now, I'm using about 25% of the account is all. And that will impact my returns. That will cause me to have possibly a lower income month in my trading. But, I kind of expect that going in, and I'm waiting for some spikes in volatility again. When I get those spikes that reoccur, I will load back up. So that's kind of the general flow of those things. So let's take a look at some of the trades we have on. Now, this one we will likely be closing out this week. We should be able to close it out for about a 10% profit or so. If we were to happen to get a little bit of a market pullback, the profitability in this trade could pop up to, about 20%, somewhere in that general range. So a little bit of a pullback would do great things for this trade. If the market stays where it is or goes a little higher, it's not going to hurt us in any way. But again, in the ideal world, we have an order setting out there that if we get a little pullback and this escalates a little bit in value, that will take us out and close this trade on us. We only have 6 days left in this particular trade. Now, this trade, also a butterfly, we adjusted this one this week, raising the right arm. When we raised this right arm, that did produce a little bit of additional risk here on the downside, but that downside's quite a ways away, so I'm not overly concerned about it. We've got 13 days left in this trade. So here this week, we're going to start to see our T0 line, this green line right here. We're going to start to see that kind of bubbling up here a little bit, much like this one is. So if that occurs maybe late in the week and we get a little bit of a pullback, we might be able to, get out of this for a little bit of a profit. We've had to adjust this particular trade quite a few times. So our profit expectations on this are going to be much, much lower. So if I can get in the 3 to 5% profit out of this, I'm going to take the money and run. So be happy with that. Then we have this trade in the rut, one of the few trades we've done in the rut, also a butterfly. This trade is going well. We have closed out a number of different butterflies along the way, raising our right wing here each time. We have an order floating out there right now that if the right conditions are hit, again, our line bubbling up here a little bit and being able to get out of a butterfly at a favorable price, we will execute that trade, which will give us this new dashed line for our P&L curve. So that's going to raise our right wing here just a little bit. It's going to reduce some risk in our lower wing here as well. So that will be the next thinning, if you will, of this particular trade. Those of you that are in the butterfly class and those of you that have been in the trading group know that once I get into these trades, I like to set orders and scale out of them when the right conditions are hit. Now, this is our FedEx earning trade. Most of our earnings trades we've been able to put on and pop off in a couple days for a 20, 30% profit, maybe even high as 50 to 60% profit in some cases. Sometimes those trades go sideways. This one went sideways on us, and I've been battling this one for almost a month now, but I've turned what was about a $500, $600 loser. Should be able to close this out this week for a little bit of a gain unless something radical happens, but I'm not expecting that at this point. So I'm thinking come Monday or Tuesday of this week, I should be able to close out of this trade for, $100 profit, somewhere in that general range. So that will be a little bit of a victory where we save this one from a sad situation. And then we had this earnings trade. So again, about 20, maybe 30% of our earnings trades go a little sideways. The other 60 to 70%, or excuse me, 70 to 80%, close out pretty well and pretty fast for us. Um, this is one that won against us. This was an earnings calendar. There were two sides to this trade. On Friday, we closed out one side of the trade for a full or virtually a full profit on our short puts. That said, we now have, this side, the long put that expires next Friday, and we may or may not be able to do anything with this. I just simply don't know yet. I'll show you guys. I got a crow sneaking up behind me here. So we've got some pet crows, and they like to be fed. They show up here at the house on a regular basis, and so I put some goodies out for them, and he just showed up for breakfast. So anyhow, kind of fun. Um, but in this particular case, we may or may not be able to do much with this because this expires next Friday. But when we got into this trade, I told everyone going in, this is either going to be a hit or a miss. There's going to be no in between on this one. There's not going to be a lot of opportunity to adjust it. So we had to keep the trade small in case it did go against us. And again, that's what happened here. We may be able to squeak something out of this. I'm not anticipating we'd get this to a profit, but I may be able to, reduce that loss a little bit, especially if we were to get a little of a pullback in this on Monday. That does often happen when something jumps up that big. In fact, let me just show you here how big that jump up was. This is kind of unprecedented for a bank to jump this amount. I mean, that's huge from 128 to 138. I mean, that's a 12%, 15% pop overnight. Banks just don't normally move that way. But anyhow, regardless, it did, and that kind of put a little sting to us. So we've got to work our way through that and see if we might be able to reduce that loss. But what often happens is when you get a gap like this wide gap, more often than not, the stock comes back to fill that gap. The question is, will it come back and fill that gap during the time of our trade? Again, this trade's going to expire next Friday. So we need to have it start pulling back on Monday or Tuesday, and then we can sell some short puts against our long puts, and that will reduce our overall loss in that trade. But it's going to be difficult to do if we don't start getting some pullback in this thing. From a gap standpoint, too, just, here's an example. You had a big gap down. Well, the market came right back up, pretty much filled that gap, and then it fell again. So a similar thing here. We had a gap up, the market came back, filled this gap area, and then went through this thing again. Now, a case could be made, although this isn't a huge gap, but a case could be made at some point that this may even come back and fill that gap. But the smaller the gap, the less likely they are to be filled. So anyhow, that is our summary for the 15th of April, tax day. Oh man, it was ugly too today. So, but if you got to pay a big tax bill, that means you made good money. So can't complain about that, I guess. So anyhow, that kind of wraps things up for this weekend. And appreciate everyone's time. Look forward to seeing you in the groups this week. And anyone that has not yet taken the deep dive butterfly class, go to the website, sgagtrades.com. Take a look at that deep dive butterfly class, and you'll get a detailed insight into these types of trades, how we trade them, how they work, etc. It's really a good class. It's about 7+ hours long, and I answer any questions in there. You have a way to communicate with me, ask questions. I get notified of those questions that go along with each video, and I would respond to those. So thank you again very much, everyone, and have a great week.